Gentleman from Arkansas, Mr. Hill, is now recognized for 5 minutes.
I thank the chairman. I appreciate you being here, Mr. Ray. Glad to have you before the committee, and I want to thank the ranking member, Mr. McHenry, and the Chair Waters, for working constructively in the digital asset space over the past 4 years. And I want to remind my colleagues that Mr. McHenry talked about bond ripoffs in the railroad expansion in the 1870s and 1880s. True. Fannie Mae and Freddie Mac leading us down the Primrose path in the early 2000s on housing ownership in the secondary market, and there were frauds and fraudulent actors. But that didn't mean that we didn't want to invest in railroads in the United States for the history of the country, and it didn't mean that we don't need a vigorous single-family housing market and secondary market in our country. So let's not confuse the malfeasance and disgusting activity of FTX with the fact that we need a proper, thoughtful regulatory oversight of digital assets. And so I thank Chair Waters and Ranking Member McHenry. 14 years ago this week, Bernie Madoff was arrested and charged with operating the largest Ponzi scheme in American history. Its collapse injured 37,000 investors and led to major reforms at the Securities and Exchange Commission and their oversight, and FINRA. Bankman-Fried was arrested in the Bahamas last night. In many ways, the fall of FTX dwarfs that of Bernie Madoff, with court filings suggesting that over 1 million creditors are somewhere in the lurch in the FTX silos. Americans were hurt, and I want everyone listening to know in today's hearing that this is just the first step that Congress is taking in understanding what happened and how to create the appropriate regulatory environment. We do want to understand the events and decisions that led to the collapse and the impact on our customers and other market participants and how to prevent it from happening again. Mr. Ray, thanks for stepping up in your leadership capacity. And in looking at the bankruptcy filing, Prager Metis was the audit firm for the .com silo. Their website says they're the first ever CPA firm in the metaverse. So looking at their website, they have 24 offices, 600 staff, 100 partners, principally California, New York, and New Jersey. You stated you're not familiar with Prager Metis, is that correct?
That's correct.
Are they cooperating with your in your role as bankruptcy trustee?
We're reaching out to both firms, audit firms, as well as the firm that does our taxes, and we certainly have tools available if they don't cooperate. But everyone seems to be cooperating at this point.
And are they? You anticipate they'll actively participate in the forensic accounting work you're doing with Ernst & Young?
Absolutely not. No, we are taking information that we get from the prior auditors and accountants and tax professionals, and then we're going to take our investigation from there on an independent basis.
Can you tell us who the partner in charge is of the audit at that firm?
I can't tell you. I can't tell you off the top of my head.
Is it Jerry Etel, Brian Goldblatt, Michael Williams? Those names ring a bell?
No, it's not. I can get I can get your staff.
Would you provide that to us, please?
Absolutely. Yeah.
Thank you. And then the second auditing firm, Aramanino, you say you are familiar with them, and that's part of a London-based firm, is that right?
Yes, that's correct.
And so do you feel the same way about their performance based on the books and records you've seen, that they also were inadequate in serving as an auditing firm?
I don't want to, certainly don't want to disparage that firm. We do have to look through the books and records and look at the audits themselves and see how comprehensive they were, to see if the audit would have picked up anything that we see. And certainly we're going to look at the related party disclosures that are in those audits, whether there's any footnotes or exceptions. We need to go, we need to go back and look at all those audits just from a look-back perspective to determine what maybe could have been done that wasn't done.
Do you anticipate the United States being a creditor in these proceedings, either for tax purposes?
It's premature to tell. I mean, we're certainly looking at that ourselves, and to the extent that we find any irregularities in the tax area, we'll certainly be notifying the IRS, but nothing we've seen at this point. But again, our investigation is so early.
You state that the internal controls were the weakest that you've seen sort of in your experience, but FTX US and FTX.com essentially there is no distinction between those. And so whether you were an international investor or a domestic investor, it's all the same pot. Is that fair to say?
I mean, that is certainly our worry. I mean, there's a limited amount of U.S. customers in the .com exchange, but we are focused on, commingling, and we're worried that the silos weren't respected for purposes of the crypto assets.
Gentleman's
I
time
yield
has
back.
expired.